I just want to share with you today my view on growing a property portfolio and why I think it is something to give a lot of consideration to, as opposed to just maybe buying one or two properties. And a point of focus for me, and something that I've relied on in theory throughout my journey of buying property, is how am I going to ensure that I'm going to get the return I need out of my investments if the property market doesn't perform to expectations or doesn't follow historical trends? So the example I just like to give is if I am hoping to make $1 million out of property, and I buy $1 million worth of real estate. Doesn't matter if it's one property worth a million or 10 properties worth 100,000. Then I need that portfolio to perform at 100% after costs to achieve my outcome. Whereas if I was to buy $2 million worth of property, and again, it doesn't matter the makeup of it, then to get the $1 million that I'm hoping to achieve, the portfolio only has to perform at 50% growth after costs. So for me, if I'm able to build a sustainable, manageable portfolio, and I can have a much larger base of real estate assets, then for me to achieve the outcomes I need, the property market doesn't need to perform as well. So for me, it's a risk management strategy, and I also think it carries less risk in general because I can still get the outcomes in an underperforming market.